Right, I think I show, yep, 12 o'clock. So I think we can get started as folks come on in. Hopefully everybody can see the slide deck. I am not putting it in presentation mode just because when I do that on my three screens, it ends up no one is able to see the slides change. So I believe you all have the ability to actually do that on your own. But nevertheless, I'm going to get us started. My name is Josh Rosenberg. I'm the Executive Director of Grants and Contracts Accounting. Jonathan, why don't you introduce yourself?
Hey, good morning, or good afternoon, I guess officially now, everyone. Jonathan Jeffries, Director of Cost Accountants and Compliance in the Office of Grants and Contracts.
All right, so appreciate you all joining us today. So what we're going to do is talk through Research Data 101. And Jonathan has certain parts that he's going to cover. I have certain parts that I'm going to cover. And so I'm going to kick us off by, and let me see how I can do this. All right, just to confirm, Jonathan, you saw my slide change? Okay. Fantastic. All right. So anyone who knows me knows I am not super technical. So much of the stuff that I'm going through here are things I use as an end user. Jonathan, far more technical than I am. I see some folks here in the audience today who I know are very technical as well. I was almost going to make Don Cochran a special guest star, but I didn't give him enough warning to do that. So what I want to talk through here in this first part is outputs that I share with executive leadership. So that's really at the very highest level, things that I want them to know and understand as it relates to just how we're doing in the research world. And so what you'll see on this slide is a list of 6 different things, 6 different topics that I cover in a monthly output that I send to executive leadership around the second week of the month. And what the output looks like is a PowerPoint presentation with lots of tables and graphs and things of that nature in it, just to help illustrate the different key things that I want that group to understand as it relates to research. So you can see the listing of things here, but what I'm going to go right to is examples or screenshots of each of these, so you can see what I'm talking about. So this first one up here is fiscal year to date awards and expenditures. And it's broken out by GTRI versus RI. Okay, so Georgia Tech Research Institute versus resident instruction, which is the academic unit side of the research house. So what you see here are, let's start off at the top, sponsored awards fiscal year to date. And again, this is every month. I do this for the full 12 months of the year. So what you see here are award totals. And in this case, I'm just using an example of through the month of September. This is across GTRI and RI. I show not only the change year over year in percentage, but also change in dollar amount. Okay, and it's important for our leadership to understand which pieces are GTRI versus RI because both are evaluated separately. Another thing to note is you see I have this note, and we're still around the top. Projections will not be incorporated into the presentation until after the first quarter. And that's really because at this stage of the game, we're starting fiscal month 5 of the fiscal year. We don't know exactly what things are going to look like by fiscal year end. It's really too early. And so I give myself a little cushion there to say, you know what, please don't expect me to put out any projections at this stage of the game. Down towards the bottom, we have expenditures. Okay, now awards at a very high level just mean dollars that sponsors are awarding to us to do research work. Expenditures represent the actual spending that takes place on those awards. And that includes both direct and indirect costs. So you see that down towards the bottom, again, broken out by GTRI versus RI. And these graphs were actually put together by Mark Militello. He started preparing them for me, I think it was like 4 years ago in GTRI. And this is a presentation style that our executive leadership has become very comfortable with. And they use this to present in quarterly meetings and outreach from the EVPR. I believe the president may even share this with the USG. So really good information that we've been doing now for years and years and years. All right. So focusing more on the RI side, because that's the side that Jonathon and I represent is resident instruction or academic unit research. And so what you see here are award dollars by sponsor. And what this gives a good indication of is where we're getting most of our research dollars from. You can see, especially in these first few months of the fiscal year, NSF and Department of Health and Human Services, which NIH is a huge part of that, 60% of the award dollars that we've gotten in this year. So I show it for this year compared to last year. Obviously, the dollar variance compares the two, and then the percentage variance shows the growth or decline in award dollars for that sponsor. And also a 5-year average look, okay? Because it's important to say, all right, for NSF, 75.7 million through these first 3 months, how does that compare to the last 5 years overall, FY22 to FY26?
Hey, Josh.
All right. Yeah.
On the awards, go back to that one. I know this is 101, but one thing I was going to mention is this isn't just a stock report that you can run out of any system. We're actually going in, somebody on our team goes to the EDW every month to pull this data out. And they even kind of have to play with the data a little bit once the award data comes out of those tables to get in these subcategories. Some of them they roll up, some of them they break out. So if you're interested in playing with it, first you have to get access to that data in the EDW. And then you kind of have to get, it's a massive table with awards across, like, I think 20 years. I can't even remember the number of columns in it, but you kind of have to find and orient yourself to how to combine this together. Here we're excluding GTRI, but if you just pull that data out of there and start looking at it, all that would be together. So it takes a little learning and sculpting and playing with this data just to kind of get it in this format. It doesn't come out just cookie cutter like this. That's all I want to kind of point out.
No, thank you for doing that. And that's really a great point and kind of a theme throughout this, that these tables and presentations have evolved over time through things that we felt our executive leadership needed to see and things that they're interested in, have asked to see. But as Jonathon noted, a lot of this wasn't just something that we could do a data dump and there it is, ready to go. We've had to, pull it together from various different places. In addition to that, I'll also note, you don't see it here, but another more recent ask has been our executive vice president for research wanting to know, all right, on a month-by-month basis, what has the trend been in NSF funding and NIH funding? So Andrew and Jonathon's group is pulling that information for me so I can look each month and see what the distribution is of award funding, which is incredibly valuable for folks to understand, especially in this current calendar year with all of the kind of things going on with the federal government and shutdown and award funding and how that's impacted us. Okay. I can't tell, by the way, with my screen whether anyone has questions or chat, but if I miss anything, Jonathon, just interrupt me and let me know. All right, so this next slide here is RI data by unit, awards and expenditures. So where this really stemmed from is us wanting to get a feel at the unit level. So College of Sciences, College of Computing, College of Engineering, et cetera. What do award dollars look like for the first few months of the year compared to the same time period last year? So we did that for awards. I want to say we started doing that a couple of years ago. And more recently, folks have been asking about expenditures year over year for the colleges. And so that's what you see down at the bottom. It is also worth noting that GTRI data is data I actually get from GTRI. Okay, so all of the RI data is pulled together through various sources like Jonathon was talking about. But I don't use the same sources to get the GTRI data. I get those numbers directly from them, okay, which can create some challenges because if you're not pulling it all from the same place, then it's probably not that different, but not all the same rules apply. And so that could present some challenges. But the reason I wanted to do that is because these reports go to executive leadership. And I want to make sure that the GTRI numbers that they're seeing are numbers that have been validated by GTRI. All right, let's see. So expenditure data by object class. So this is very relevant for us in our grants and contracts world because we really like to get a feel for what's happening in these object classes year over year. You can obviously tell by looking at this that our big two categories are salaries and wages and subcontracts. Okay, that represents a massive portion of total expenditures, as does indirect cost down at the bottom. Now, when we invoice our sponsors, we are using these categories to invoice them. And so obviously these object classes are a bunch of ledger accounts or spend categories lumped in together. But where this is also relevant is there are certain cost object classes like equipment, like a big portion of subcontracts that don't receive any F&A. And so this allows us to kind of get a feel for what we may be recovering in indirect cost if we see where the growth is in whether it's F&A bearing object classes or non-F&A bearing object classes. So this is tremendously beneficial to us to be able to track it at this level. Early on in the fiscal year, big variances may not tell much of a story, but once we get through to the last 6 months of the year, then we really can start to see how these trends are playing out. Jonathon, you want to add anything?
Yeah, I think you mentioned something I wanted to mention, but I was going to follow up a little bit. All this, this is how we bill our sponsors. So this is kind of what an invoice will look like at this kind of level. And looking at those last two at the bottom, high performance computing and unallocated, those are, like Josh said, are all ledger accounts that are mapped to these categories. But those two are particularly unique. High performance computing, Georgia Tech internally decided we're not going to charge F&A on our high performance computing object code. So we had to create that separate object code so we could map those accounts and make that a non-burden with F&A object class. And then the one above that, unallocated, those are generally ledger accounts, I don't have any memories, that aren't charged to sponsored programs. So those hit there, they're unallocated, and our billing team and our analysts kind of have to do a little bit of due diligence to figure out, is this appropriate, and to make the billing work. Those really are unusual. So every time something hits those categories, whether it's supplemental pay or a direct rent charge, we have to do a little extra digging and make sure it's appropriate. So there's a reason we leave those unmapped, so those don't just get billed without that extra level of review.
Right. Okay, perfect. Thank you. All right, invoicing and financial reporting. So these outputs are coming to us from Workday, and I'll explain more about that when I get to a later slide. But this is information that our sponsored research accounting team utilizes, along with, I share this with our executive leadership, to give a feel for how are we doing on invoicing our sponsors relative to where we were last year. Same thing with financial reports, along with some other statistics down at the bottom, like journals and what percentage would we consider appropriate grants management versus red flag. Also information on initiations, mods, corrections, closeouts, etc. And as you'll see in a little bit, this is great information for me, especially in this period of federal government shutdown where we are all looking at cash every single day. And we can't get the cash if we're not invoicing our sponsors. And so there's going to be a report that I run literally every single morning in Workday, and I'll talk through in a little bit, that allows me to see the invoicing statistics, and I can run it by date ranges, which is incredibly helpful just to see what are the trends, how are we looking this year versus how we looked at the same time last year. Because to compare month to month, like September to August, may not be super indicative, but in our world, a lot of things follow trends across years. And so to look at awards in the first 4 months of the year versus the first 4 months of last year, that's very telling to us because we're not a smooth operation in the sense that we have the same dollars each month. So year over year becomes tremendously beneficial. Okay, award exceptions by department, and I'll talk more in detail about all types of exception reports that we are now utilizing in a little bit, but this one specifically is the award exceptions by department. And this represents situations where when we look at actual expenditures and encumbrances and obligations and commitments, along with F&A obligations and commitments, it ends up being that we're over budget. And that could be a case for awards that are still ongoing, which are the in-performance awards, or even worse, it could be past term. So in other words, we're over the budget and the award end date has passed. So what I'm really looking for in an output like this is two things. First of all, in the past term column, I want as low a number as possible. Okay, actions must be taken when we have numbers in that category. The other thing I'm looking at is award ID counts over on the right. And you can see it reads from right to left. September 2nd is in yellow and October 1 is in red. What I want to see is that the red column count is lower than what the yellow column count is, because that means that these actions are being taken on these exception situations. So I'll talk more about all of those in a little bit. But slide 9, this is the slide that Jonathon and I are going to tag team on. So I'm going to let him talk to you about those first couple reports in light.
Hey, Josh, before we go forward, I saw a question. Sounds like it's right up your alley. What is F&A? I think we both used that term, and that's a different presentation. But do you want to give the high level one?
Yes, F&A stands for Facilities and Administrative Costs. It is also known as overhead costs. In our world, it is also known as IDC, indirect costs. These are all of the costs that support our research operation that cannot be direct charged to the grant. So Jonathon and I are examples of F&A costs because in grants and contracts accounting, we are supporting thousands and thousands of awards. So to charge us individually to each award would be impractical. Same thing with utilities like the lights in our offices. To charge a cost to each grant for the cost of lighting the building or water, steam, electric, et cetera, would be unproductive and basically impossible. So that's what F&A stands for, overhead or indirect cost recovery.
Thanks.
Yep.
All right. So these are some reports that I use. I'll start at the top. Reports that are in light. One of the big functions that my group has to do every year is effort reporting. Effort reporting is how at Georgia Tech on the non-GTRI side, we keep up with effort, the amount you work on a grant, the amount you work on instruction, the amount you teach. We don't keep hourly or monthly time logs, so we use annual effort reporting. And these are some reports that we had developed to help folks track effort reporting. Not to go into detail the effort reporting, but in light, we have two reports in particular when to talk about the ASR statistics. ASR stands for Annual Statement of Reasonableness. That's how, as a PI or a graduate student at the end of the fiscal year, I go in there and attest that the effort shown on that report is accurate to how I actually did my work. And we have to collect about 6,000 of those every year. So it's a big effort. It's a big outreach. We used to have kind of a behind the scene cold fusion report that my team could see that showed these statistics. But we realized to get these out, to make it more beneficial for departments, we need something more forward facing and use light, which is where everybody kind of goes to for their reports in structure. So this report will show you at the college level, at the department level, what employees have certified their effort every year and which employees have not. So you can kind of compare yourself between groups. We can see where we need to communicate more. We can see where we're on target. So it does it at the college and the call center level. So that's a really good high-level report for financial managers to see how their group's doing, or even financial directors, if you're in the College of Science, to see what units need to kind of focus on this and maybe need to work on managing and make sure they have some time to get focused on this ASR reporting, which is a big challenge. The other thing we did is ASR for off-boarding employees. This is also in light. So if you have employees that are graduating or just leaving Georgia Tech, you can run that ASR. You don't have to wait to the end of the fiscal year when commitment accounting closes and we send them out. You can get it done early while that employee is still on Georgia Tech campus. You can print it out as on one of their last days as you meet with them, make sure they review it, make sure it's accurate, and go ahead and get it signed, and then you can send it to my team and it's done. And both these are on light, which makes it a lot easier to get to, a lot easier to access. On the same thing, salary data is ad hoc salary details report in light that's super, super helpful, whether you're at the individual level, at the Jonathon level, you want to see where my time is charged. You're at the department level, you want to see all of grants and contracts, or you want to go to a grant and see what grant time is charged to a grant. You can go to individual or detailed, and you can run that as a lot of different filters on there. You can run the report for whatever time frame you want. It can include actuals, it can include encumbrances. You can dump in Excel and just do whatever you need. I found that an invaluable tool from a compliance standpoint and just managing a department, I would think it'd be very useful to see where folks are charging times. And if you have some concerns that maybe that effort's not being charged the right place, you can get ahead of it, because as a department manager, you cannot see everybody's effort reports. But in Light, you can review it, and you need to have a conversation. Is this the correct effort? You get ahead of it and look at it every month. So I think it's a great report. I think the next one's yours, Josh.
Yeah. So with the research tab in Light, so this is another area. Jonathon's ASR statistics report is fantastic. I literally go in there every single morning to see how we're doing on our ASRs. I also every morning go into the research tab in Light, and I take a look first at research proposals, new awards, and sponsored expenditures. And in particular, I'm focused on new awards because I want to get a feel for, and it's updated every day. Usually I can get new numbers around 8 a.m. And I'm looking at awards just to see, again, how are we doing this year versus how are we doing in previous years? And right now it's showing me FY 26, 25, and 24. And I can break that out by GTRI and non-GTRI. And when I do that view, it will give me, like if I run it tomorrow morning, it'll give me awards through November 3rd, 2025. But then I have to compare that to how the graph looks at the end of the month. All right. So right now I would look at this and say, all right, we're well below November 30th of 2024, but that's okay. We expect to be. We still have 4 weeks left in the month. But I'm looking at trends. Okay. So it gives me the stats and it plots it for me on a graph. So I can get a feel for how we're doing kind of year over year. So I love that report. Proposals I'm also looking at because we can't get the money if we don't ask for the money. So I'm looking at the trends and proposals for GTRI and RI. Sponsored expenditures, I use that sometimes, but it really isn't, it doesn't help me too much until payroll hits. So it's really good to look at sort of towards the end of the month as opposed to this early in the month. But it is a view I can get. Sponsored expenditure profile report gives me year over year comparisons by federal sponsors, state, local, foreign, industry. So I get that level of detail, and I can look at it over a period of, I want to say, 5 years at this point. So that's really helpful as well to give us a feel for what's our exposure to federal awards versus state, local, industry, and things of that nature. The exception reports, I already talked about the award one, but we have 7 current exception reports that I send out on the first business day of each month. So it would have come out for me about 2 hours ago. So if you have an email related to exception reports, you're welcome. But nevertheless, those are things that, and it doesn't apply to everybody. So if you are the recipient of one of those emails, it's because you are the grant manager on an award or grant that ends up on one of these exception reports. So the award one you saw, we also do it at the grant level. So if a grant has expenditures and encumbrances and obligations, that puts it over budget. The cost share exception report is one where, let's say that your award, you have cost share on your award and you've spent down 30% of the dollars that you've been awarded from the sponsor. Well, they want to see that your cost sharing is aligned with that spend rate. Okay, because many of our sponsors will not accept invoices from us unless we can show that we're meeting our cost share in alignment with the actual spending of their dollars. Missing PIs. So awards and grants where literally there's not a PI assigned to them. It happens sometimes. It's not a huge list, thankfully, but we want all of our awards and grants to have PIs. Open obligations on grant lines that are in closeout status. So obviously, if a grant's in closeout status, there should not be any obligations that are on it anymore. So that needs to be cleaned up. Charges past the end date. If it's past the period of performance end date, we cannot bill our sponsor for that because we will not collect. So those charges have to be moved onto non-sponsored funds, or the end date needs to be adjusted with justification. No activity awards, that's a new one. And that's a situation where we have set up an award, but it's been 90 plus days and there haven't been any charges on the award. So we want to make sure that you all are aware of those when they happen. And again, I send them out on the first business day of every month. And we actually have a bot that I believe sends out a few of these on the 5th and the 20th of each month. So notifications that at least these awards and grants need to be looked at. Now, whether actual action has to be taken remains to be seen, but we want people to be aware of these. I'm going to do the first 3 Workday reports here, and Jonathon will do the last couple. Find customer invoices. That's the report in Workday that I use, and it's a custom report in Workday to give me an idea of invoicing activity that is taking place by our group. And so I had showed you that slide earlier that had invoicing statistics year over year. I use Find Customer Invoices, and I can set the date parameters. Extremely beneficial. Gives me great information so I can see what sponsors are being invoiced. I can see how much. I can see the dates. So I love that report. Find award tasks. Also in Workday, I can use that to see, what are the award tasks that are due? Final reports, semi-annual, monthly reports. So I love getting that detail through that report as well. The KPI, Key Performance Indicator dashboard for grants and contracts. So there's several tabs here that I use. So sponsor billing helps me see the types of invoices that have been sent out. And again, I can do year to date, year over year looks with that. LOC stands for letter of credit. So I can see there how much have we billed to NSF, to NIH, to NASA, those sponsors that allow us to invoice them through letter of credit mechanisms. So that's great because that's where our biggest dollar invoices are going towards. GTRC billing, that's something that it gets a little detailed, which I don't have time to get into, but basically GTRC is the Georgia Tech Research Corporation. 95% of our sponsored awards run through them on the academic unit side. And each month we bill them for the direct and indirect costs that we incur on awards contracted through them, and they reimburse the Institute. And so this allows me to track that. Award activity really relates to amendments, corrections, billing, schedule events, things of that nature. So Jonathon, I'll do for the last 2 are yours, and then let me know when you want me to change the slides.
Yeah, thanks. So on these last 2 slides, I just kind of showed there's so many reports in Workday. There's so many reports in OneUSD. We couldn't have time to even go over all the ones that could use be sponsored. So I just wanted to highlight a couple of them that I use frequently or I thought might be of interest to folks out there. So next slide. So one of them is this GT fiscal year TD RI and other unit sponsor expenditure by PI. That is a mouthful. That is a long title. But where this can be useful is this is kind of summary level data. You can run this by call center. You can run this by period. You can pick an award PI or you can pick a grant PI. So Josh was talking about this earlier. In Workday, every time we get a sponsored award, a new contract, an award gets set up. An award gives you that high level information. Who's the sponsor? What's the F&A rate? How often do we bill? When do we bill? What's the period of performance? Things like that. But when you actually put an expense on a sponsored award, they create a grant line underneath that. That's where your expenditures goes. So every grant has one award, but an award can have many grant lines. And at Georgia Tech, if there's a reason to break out the expenses further, maybe there's a subcontract, maybe a department is taking some of their budget and give it to another department to spend some out, we can have multiple grant lines. So that grant lines are where the expenses happen. So this report, if you run it by call center, will show you every award and every grant in your call center. It'll show you the award PI, which is the high level PI, who ultimately is responsible. It will also give you the grant PI. And those could be 2 different people, like in my example, or maybe ME got an award and some of their budget went to ECE. You could have different PIs. So you can see them clearly on this. It shows the total expenditures for each grant line, and then it breaks down that total expenditures by direct expenses, indirect expenses, and net indirect expenses. So we're not going to get super in the weed here, but people that do a lot of grants or award or sponsor accounting units, you're going to be familiar with those terms. And so units find this helpful if they want to say how much a PI spent or how much their call center spent. And they may care about that full indirect, which is gross indirect, or the part that actually Georgia Tech gets, the net indirect. So this, you can take a big data dump by your call center, and then you could pivot by grant line, different PIs, indirect, direct, and do things different ways. And this becomes very useful in the units. So next slide. So find journal lines. This is my kind of go-to report for things I do. Find journal lines is really helpful if you care about the expenditure data. If you're looking for budgets, you're probably going to use a Sabre if that's what you're doing. But if you purely want to pull the expenses that happen over a certain period, you want to use Find Journal Lines. You can do obligations, encumbrances, or expenses, and you can set your periods as you want to. You can also run it by grant, like an individual grant, or you can run it for the whole award. So you can see everything that happens on the entire award. And what I displayed here is kind of a pivot table, and what I've really found recently that's very useful for this. One thing we don't have in Workday that works well is a trial balance at the award level. So when times when we've found kind of lingering issues of maybe billing or expensing or just AR accounts on an award, we'll run it for multiple fiscal years, the whole life of the award. We'll take it, throw it into a pivot table. Up there at the top, I kind of show my pivot table where I've removed one of the sources, which is beginning balance. We're not going to get to accounting backbones, but if you use beginning balance in this report on your Find Journal Lines, you're not going to get the numbers you want to see. You're going to get a lot of roll forward things that happen at year end, and it's going to kind of cause confusion. But I do it by fiscal year, and things I'll do is I'll look up here and I can see the AR. This one has a receivable and federal funds. That's something, if this award was closed, we'd want to see why we still have an outstanding AR. And we can see what year it got created. And this example was FY20, which is our conversion year. So we might have some issues at conversion that we need to kind of unearth and get cleaned up. Also over in a highlight, I've got this $16,900. What I've done there is I've summed up the revenue and expenses. When an award closes, in most cases, our revenue and expenses should equal each other. So if I got a balance there, I probably need to do some digging to see what happened. So I've really enjoyed this report to be able to give me all the fiscal year activity and all the ledger activity so I can really drill in and see what happened on any award, for a whole award, not just a grant. Next slide.
Okay, I think these next few are me, and then turn it over to Jonathan for the rest. So frequently used reports in the units. These 4 categories of reports are what we recommend that if you are a grant manager, you are a PI, I recognize not all PIs will actually go in and do this, but that these are things that are in place to help you manage your awards. So just to give you a couple of screenshots of this, and this all came from a PI article. So these are one-page articles that our office writes every month. Just on all topics related to research administration, specifically geared towards post-award research information. So for managing sponsored funds, lots of different tools that we have available for campus. So you can see the first one, sponsored billing activity. You can get to that through GT Crossroads. Obviously, that, as you can see here, information is provided on demographics of the award, and then details on charges, invoices we've sent out, cash collections, expenses, activity by month. The Sabre suite. And I want to say that the Sabre report, the main Sabre, was one of the very first reports that was created in Workday. This was a little prior to my time. For those of you who are relatively new, we went live with Workday Financials in, I believe, July 1st of 2019. So fiscal year 20. And so the Sabre report, and there are many folks out in the audience, Don and others, who had a big role in getting this out to campus. So this gives you that information about budgets, actual expenditures, obligations, commitments, available balances. There's a whole suite of Sabre reports that are out there. The object class, Sabre by object class, is available. The budget and expense report, or project budget and expense report, Sabre PEB, is out there. But I would say the most popular one is certainly the original, the OG Sabre. And then grants and contracts ad hoc salary detail. So Jonathon talked about, if you want to know who was charged to your project over a certain period of time, you could go to Light and get this report, tremendously beneficial. The PI Award Health Check is one that we implemented, I want to say, about a year and a half ago, 2 years ago. And the idea behind that, and I go to light when I use the PI Award Health Check, but it's a one-stop shop report. And it has at the top award demographics. It has details on spending relative to budgets, open purchase orders or POs, open subawards, and individuals who are paid off of those awards. So the idea behind this was to create one place where folks could go, because a lot of this information was contained in different spots, which made it difficult. And so, this is, we again rolled this out a year or two ago, probably 2 years. And one of the things that we're about to put in production, if it hasn't been already, is a summary table at the top. So for a PI who may have 5, 7, 9 different awards, it's good to have a one place to look to see what is my budget, what's my spending, what's my available balance. So that's something that I think is added to the PI Award Health Check that I think will be tremendously beneficial. And before I turn it over to Jonathon, just want to big a huge shout out, not only to our systems group in grants and contracts, Amy, Nellie, and Tony, but also all of our partners out in OIT who have done an amazing job getting us to where we are now with all the reports and tools we have available through Workday, Light, Crossroads versus what we had, even 3 years ago, 5 years ago. So huge shout out to them. All right, Jonathon.
Thanks. So research definitions. This comes up a lot, not just in research, but across campus, is people can use words to mean different things. We could get a lot of emails, somebody asking us give me the research expenditures for this year or that year. Well, we have some questions for you because we want to understand what you're asking for so we make sure we get the consistent data. A couple of years ago, I think we worked with IRP and made some of these really high-level definitions to help us when we get those questions to make sure to give the right answer. You could slice and dice anything in sponsored further than this, but these are some high-level ones we use consistently. The first one is sponsored awards. Josh talked about that. There's a light report where you track sponsored awards. Sponsored awards just means we have the contractual obligation that we may spend something. If it's been obligated, it can go away in certain cases, but it means we've been approved to start the spending in most cases. That comes to our Office of Sponsored Programs. It doesn't mean expenditures. Again, that it's sponsored awards. It means we can spend on it. Awards can be for 1 year. Awards can be on 5 years. So when we get an award in our system, if it's a $20 million award over 5 years, you're going to see the whole $20 million that we've been contractually allowed to spend. Some systems may do it differently, but we're going to see that full amount. It's not to include any state appropriations kind of looking down. It's not to include any F&A, unreimbursed. It's going to be what they said you can spend. That's all that is, and that's those light reports. The next one is sponsored expenditures. And we talk about sponsored expenditures. Those are things that happen in grants and contracts on the RI side, but that can also be spending that happens in Georgia Tech Foundation or Georgia Tech Research Corporation. Sometimes we have fund flow at Georgia Tech and includes those dollars as well. So there's a light report that includes sponsored expenditures, and it shows not only grants, but those gift work tags and those GTRC work tags that are internally funded. The report on light, which actually includes this definition as well, notes on it that we exclude GTA expenses because even though they're sponsored in our work tag level, the way we do it, they're generally not what people are looking for or thinking about when they call sponsored expenditures. And that's consistent with how we always did reporting around here. So it's sponsored expenditures, looking at the bottom, it includes all restricted fund activity except GTA, meaning it includes the GT Foundation and GTRC gifts. It includes expenses that are for research, sponsored research, but it also includes sponsored instruction. If Home Depot or Coke goes to our College of Business and asks some of their PIs to put on a class there, those expenses, which are instruction related, still get included here because it's set up under a grant work tag. No state appropriations, no tuitions are included in that. So going to the next one, research and development expenditures. There's a big nationally recognized survey. It's called HERD, Higher Education and Research Development. When the numbers were released, there's always a flurry of emails. All universities love to look at those and compare each other to them. So it's a big survey. That includes sponsored expenditures, but it only includes the research portion of those sponsored expenditures. So we're kind of taking that subset of sponsored expenditures and nailing it further. But what it also includes is if Georgia Tech provides money through tuition, state appropriations, any other funding source we have, and we spend that on research, that gets included as well. So it include things that are non-sponsored, that aren't in those sponsored expenditures. It's kind of, a big pot of money, anything to do with research. And outside of that, it also includes unreimbursed F&A. We've talked a little bit about F&A. We don't get too deep on that. But sometimes some of our sponsors will say, hey, your rate's 50%. We're only going to pay 8%. So we have this gap between the two that we're not going to get reimbursed for. And that HERD study, we're allowed to include those charges for things we should have got reimbursed for but didn't. And then lastly, the external sponsored expenditures. That's the one Josh really pushes out to his executive reports. That's the one he shows the buzz every month. Those are really a third party outside of Georgia Tech, unrelated. Think of NASA, Department of Defense, something like that. They're actually contracting with us to do some type of research, some type of instruction, some type of activity, and we're billing them for them. So that's new money to Georgia Tech that we're able to bill for because we had that award and then we expended on it. So next slide. Challenges with data. I mean, our data is good. We've learned a lot. We've gotten better, but there are frustration points that, everybody can deal with. Inconsistent data definitions. Everybody can have their own definition. That's the reason we made that last chart we just went through about sponsored expenditures. That is we used to call it the big number or the little number. Which one are they looking for? And it depends on what their audience is. But we want people to be consistent and know what they are presenting on and know what they're giving. So that's why we'll always ask questions when we get those 5 o'clock emails on Friday asking for a sponsored expenditure number. We want to make sure we understand what they want and they know what they're presenting and not be surprised. Lack of a query tool. If anybody was around when we used to have PeopleSoft Financials embedded in PeopleSoft Financials with this nice little tool where somebody like me that's not really a coder or SQL expert could go in there and really easily, if they knew their data, pull data into an Excel spreadsheet, manipulate it. Workday doesn't really have a tool like that. EDW, you have to really know your tables. You have to know how to use SQL. So it doesn't have that feature, which would be a nice thing to have. So someone like myself can go in there that maybe knows what they're looking for, but is not an expert in writing SQL statements. They can't really join statements together, join tables. They could just pull the data in and play with an Excel. That's something we don't currently have. Knowing your access and needs now and the future. That's one of my favorite ones. I used to get a question a lot when we first went to Workday. Do you have access to everything you need? Well, I don't know because I don't know what's out there. There's not a repository that I'm aware of that tells me every data source and every table's out there. So I actually don't know what I need access to that I don't have. So it'd be nice at some point. I think I've heard folks who are working on behind the scenes to create that repository to what all the tables are in the EDW, what all the Workday reports are out there, and what those definitions are. It'd be super helpful to a new employee because currently kind of learn it by attending things like this and just talking to your peers. HR data. That's a sticking point. There's probably an expert on this call. I think there's a presentation later by some of those experts. But for me, I get a little stuck when I ask to pull effort data or HR data around job title and position number. The same employee may have 3 or 4 job titles during a year. A lot of times our students will have 2 job titles at the same time. They may be a graduate research assistant. They may be a lifeguard in the CRC. So when I'm pulling that data in, how do I make sure I pull their predominant job and not just that lifeguard duty? Kind of struggle with that. Same with position numbers. If funding changes, depending on how I'm pulling it, I can get the same employee listed 4 or 5 times, and it makes it hard to figure out what I'm looking for, what my counts are. Call center versus HR department. It's one of my least favorite. In HR, people are assigned to an HR department. There are old PeopleSoft numbers, but then in Workday, we have call centers, and there can be a many to one assignment. Our space is assigned by HR department. So the people, when they're tracking their facility space, they may say it belongs to ECE. That's 220, 210. But the call center is something completely different. So when people want to do metrics between space and financials or how many grant expenditures are done, per research lab square footage, it becomes really hard to map that and inconsistent between years. Some Workday reports, I don't think we have this problem as much as we used to, but when we first went to Workday, one of the things I learned that some of the reports couldn't handle big data sets. So if I left my filters really wide open, I wouldn't be getting all the data, but Workday didn't really let me know that. It was only behind the scenes or me kind of doing some sanity checks that I could realize that those numbers weren't as big as I thought they should be. I think we've kind of cleaned that up a little bit, but something to kind of watch out for if you're expecting a really large number and you're not getting it. I always say kind of check two sources and see if it's a reasonable total that you get before we kind of start and report out on that. The FDEM knowledge is critical. We have some classes online, some learning classes you can do. We've done some things on our website to help understand the financial data model. Most people call that a chart of accounts. FDM is kind of a Workday specific term. But understanding how fund and class and function and call center and department, how all those things work, what they mean is really important. And that can help you when you're developing your queries or your SQL statements, or even at working with your reporting team to get the results you want on that new report. Department reporting structure changes. Workday has a nice report called call center hierarchy. So you can see who rolls up to the College of Engineering, who rolls up to finance and planning. But if you're doing multiple year reports, those hierarchies can change. And sometimes it's not communicated as well as we'd like it to be. So if you're trying to compare data from FY20 to FY25, you may get some inconsistencies because of those changes in reporting units, because of a restructuring. As far as I'm aware, there's not a good way to run call center hierarchy with an effective date. So you can see how things changed or how we moved call centers around to report to different units. Transactions with multiple work tags. So what we're used to seeing there is you'll see a Georgia Tech gift in Workday that has a DE. My understanding is the spending should always go on the DE. But when you're doing a big data set and you pull it out of the EDW, sometimes it's hard to figure out what's the primary work tag, who's really in charge of this. If you have two work tags, where did the spending actually occur? And I know when I've done some reporting and loaded things in some of our cost accounting software, that's kind of caused me some struggles in the past because I don't roll up the same way as Workday did after I'm reviewing the back end. Workday name changes and grants, for instance. What can happen in a grant is when we inactivate it, inactive can become on the title. So if you're doing a VLOOKUP between sources, it may be inconsistent in how you're pulling it in to get that title. You may miss some things. So watch out for how Workday, sometimes on those reports, it'll put the D and the name together. So you have like a string of characters versus having one column with just your number and another with your name. So you can use Excel to break that up, but that can be a little challenging and a little frustrating if you're trying to get names, whether it's the call center name, the class code name in there. And balance sheet reporting at the award level. That's kind of the reason I threw the pivot in this morning. We were kind of reviewing our slides to show how I use that to make a balance sheet at the award level. Because Workday does have a balance sheet, a trial balance report, but it only runs at the singular grant level. So if I want to see the whole scope of things, I kind of use that fine journal line so I can see how all my balance sheet, my ledger accounts roll up at the award level at closeout to make sure I don't have anything I need to clean up at the end. I think that's ready for questions, right?
Yeah, and so I'll leave this up. Obviously, that's for the feedback, but also wanted to note that you have Jonathon's name, you have my name, so please feel free to reach out with any questions you have related to the content that we covered today, anything that we maybe didn't cover today, but you're interested in from a research administration perspective, really on the post-award side. But I do think we covered a pretty wide breadth of material